Hello and welcome to the Collective Shift channel. Matt here to share with you the week's worth of news from the macroeconomy and the crypto industry. It's been a massive week full of turbulence, particularly in the markets, stock market, as well as the crypto asset market. So I'll definitely get into the crypto asset side of things towards the end of this episode. As always, I'll start off with the macroeconomy, and definitely the place to start would be just to reflect on what a huge week it was to the downside in the stock market, with the S&P 500 and the Nasdaq index both suffering their largest falls in a single week since March 2020, which many of you would remember was when there was that historic capitulation in the stock market. So, what's been causing this? Why has this all happened? There's a lot of opinions out there. Like anything, I strongly believe that it's just a confluence of factors. I don't really think people are giving a lot of attention to one of those factors being, which is, in my opinion, is a big reason for this, is simply that it's just that it is people taking profits on what for many people have been life-changing amounts of gains that they've made over the past 2 years. It's worth stepping back for a moment and just seeing just how historic, or I guess how much of an outlier the past 2 years in particular have been in the stock markets. And I guess everyone was expecting that to continue for a third year. It's definitely not looking like it to start off the year, but I think a lot of people kind of just forget what such historic times and the never before seen circumstances in the stock market that we're living through at the moment. I think a lot of people have kind of almost gotten used to seeing up and to the right only when they're looking at the stock charts. So I honestly think that that's a big reason for this sell-off. Of course, there is a lot of fears at the moment, particularly to do with, as I've talked about in previous episodes, just the actions of the US Federal Reserve, or the central bank in the US. I think their market's kind of priced in about 4 separate interest rate increases in 2022. And they have also committed or said that will stop their monetary stimulus. So a lot of people are still pointing to that as the reason for the sell-off. I have a hard time believing that, to be honest. Yes, I think it's contributing. But we've known about this, the market has known about this it's been a good 3 or 6 months now, where the Fed has signaled that it's going to eventually wind down, tapering its monetary stimulus. And it's also been pretty obvious that they're going to need to lift interest rates at some point. With the inflation numbers coming in probably a lot sharper and have stayed very elevated, that's probably expedited and accelerated, I guess, central bankers' willingness to lift rates. So that's probably one thing that has changed a bit in the last 2-3 months. But I still have a hard time putting that down as the sole reason why the market is tanking in the past week. There's also, of course, geopolitical fears, particularly with respect to Ukraine and Russia at the moment. Anytime there's uncertainty in the market, uncertainty towards a global event such as that, in such a timid and fickle kind of market that we're in at the moment, any news like that seems to compound and also just weigh on stock markets and crypto asset markets. So I did just want to also comment on that, because that's inevitably a factor at the moment as well. This week in particular, in terms of what I would be looking for as a stock investor, or just someone who's observing the stock markets, it's definitely, it's pretty obvious, I think, that the outcome of the Federal Reserve's meeting, so they're meeting on Tuesday and Wednesday Eastern time, and the decision they make with respect to monetary policy, of course, will be very significant, and almost arguably more importantly will be the follow-up commentary by the chairman, Jerome Powell. Throughout all my life, I've never lived through a time where it seems the market is so intently listening to every word that guy says. So whatever he indicates is the attitude of the central bank will really come through in that press conference. and people will be paying attention. How indicative and how much signal is he going to give that the Fed is willing to, increase interest rates multiple times this year, and also what is it doing with respect to tapering their monetary stimulus, in light of those inflationary concerns that have, really, I guess, bumped up the priority list. And just as a slightly off topic as well, inflation has now become like a very, very concern for the Democratic Party at the moment. I think, a lot of the times the effect of an economy, of course, is the responsibility of that is, rightly or wrongly, like to a degree. Some people put the entire blame or responsibility on the government. Part of me feels like it's a lot of a momentum, and that when they come into office, there's things already going where they can't control. That aside, I did just want to point out that inflation is a really, I guess, up on the priority list for voters, and that is really important with the elections getting closer. And in my opinion, it's why I don't think that the central bank's going to go too aggressive with tightening monetary policy, because they will have that political, that indirect political pressure from the Democratic Party. We do live in these weird times where those two are not so independent anymore. So they're just my expectations anyway. Also, very, very short term, I did want to point out that earnings season is here already in the US. I think Apple is announcing its earnings after trading ends on Wednesday Eastern time. That's the main one I will be looking at, because I think it's kind of the first major tech company to release their earnings, and if they miss their earnings, oh boy, it's going to be a bit of a bloodbath, I reckon, in these fickle conditions in terms of Apple and all the other tech giants. In my opinion, would sell off if depending on Apple's earnings. So if you were watching my videos towards the end of last year, you would remember that the earnings season was extremely bullish. There were so many, better than expected earnings reports. And that really helped, I guess, justify the valuations in the stock market, and really helped keep the stock market at record highs despite all the inflationary signs starting to creep in. So, it will be very, very interesting to see, the performance of this quarter's earnings reports, particularly because of how much importance it had last quarter. Starting off in crypto and kind of keeping a bit on the political side of things just quickly, there was one of the more significant news items from the week was US President Biden reports that, he was readying an executive order to release as early as February next month. And this order will outline a comprehensive government strategy on cryptocurrencies. And this order will also ask federal agencies to determine the risks and opportunities for government with respect to cryptocurrencies. So Bloomberg reported this late last week, unnamed sources. So this is also happening in the backdrop, again, as early as February. So might not happen in February, but, I can't really see this being overly aggressive. I think it would just be, something that helps, support the cryptocurrency industry, but not too friendly as well. That's kind of what you typically see with these sorts of things. I think it would be stupid of the US to completely be overly aggressive with this sort of order. And because they do really have a budding, thriving domestic crypto industry, and increasingly a larger percentage of the voter population is invested in crypto and is a supporter of the industry, whether it's NFTs or cryptocurrencies like Bitcoin or Ether. I think this would be very important whenever this does drop. And I'm very keen to see what this directive actually details. Another significant development that I did just want to touch on, Coinbase. One of the world's most popular exchanges announced, I think earlier today, that they are adding a new tax center into their app and website just for US customers. But I did want to, this is just like, I think very, very major progress for the industry really, with Coinbase being looked to as the biggest or the most compliant crypto exchange in the world, or definitely in the US, one of the oldest as well. Seeing them almost at the forefront here of helping actually make tax management of users' cryptocurrencies a lot more simple. Working out here, this software will work out how much US citizens owe to the IRS as a result of crypto transactions. Why have I included it in here? Why do I think it's significant? I just spoke a bit about it, but I did just want to also just touch on the fact that I still think tax is a extremely, barrier to people's willingness to participate and invest in crypto assets. I know here in Australia and many other developed nations, it's still very hard to report your taxes and I guess to calculate them confidently, even with so many accountants out there not really being knowledgeable of the space. And I say that because of just how much innovation has come into the industry in the past 2 years or so. 2 years ago, DeFi or decentralized finance barely existed. And now we're living in a world with this like quote unquote DeFi 2.0, which has so many different exchanges of tokens and interest earning like revenue, so many of those sorts of mechanisms, which, in many cases technically are taxable events. And then you've got NFTs, non-fungible tokens, which I fear that a lot of investors don't even know, or at least in Australia, or at least in many other countries, like they don't even know that they actually are buying a capital, an asset, and then when they do sell or trade that for another cryptocurrency or cash it out into Australian dollars, that is a capital gains event. And I fear that a lot of people don't even know that. So to see Coinbase here really, I guess, integrating tax reporting into its own exchange and app was a really promising development to see. And crypto tax software is like an area which is just exploded in the past 18-24 months, just because of how like extreme the demand is for a crypto tax solution that is just on top of all the latest innovations. Those companies are going to do extremely well, in my opinion. And it's just like such a great business model because crypto is not going anywhere, in my opinion. And, these tax agencies are going to have to figure out how to make it easy as possible for accountants and individual citizens to report tax as a result of crypto kind of exchanges and investing. All right, Ethereum here. I did want to touch on this. That's the Ethereum Foundation has put out an announcement, basically, encouraging everyone to stop using the term like ETH2, or Ethereum 2.0, as many of you would have seen, has kind of come to the fore in the past 12 months or so. And I think this is a smart decision. You can read the reasons why they're doing it in this blog post. It kind of outlines it. But I think the big transition to proof of stake, the consensus mechanism, I won't really get into how that all works for the sake of this macro recap and crypto recap. Basically, they're transitioning to proof of stake, which is more environmentally friendly. It's just another way of running the blockchain. I'll just keep it at that. That's happening, roughly middle of the year, probably June or so. That proof of stake transition, I think the Ethereum Foundation is more encouraging everyone to think of it more so as just a software update. With the major overhaul, it's almost an ongoing thing where they're overhauling this thing into this new, or what they're calling here is merging. It is called the merge. It's merging what we used to call ETH1 and ETH2. Merging those in its final format is not happening in the middle of this year. And I think it was never going to happen at the middle of this year, but I feared a lot of people thought that was going to happen. So that's why I'm happy to see that they've actually, made this announcement to make it a bit more clear. But I did just want to touch on that because probably the most underappreciated component of this whole transition to ETH2. Oh, well, let's not call it. Let's adopt their new terminology, consensus layer. My apologies. I really just want to take a minute here to stress to you all what is actually happening, or what, more importantly, what is not happening when they merge, when they go to proof of stake in June or July or May, something like that. I'm very concerned that a lot of users and casual users of crypto think that event that happens in May, June or July is going to make Ethereum cheaper to use. As we all know, Ethereum has had a shocking past 6 months or so in terms of the costs, the extremely high costs to use Ethereum has just unfortunately priced out so many untold numbers of people from even getting into crypto and using it. And I think a lot of people have this misconception that this event that's happening in May, June or July is going to help fix the gas fees and help make Ethereum cheaper to use. I've said it before several months ago, and I've said it multiple times, but I think I just want to just reiterate it here and to kind of get you just on top of it, that this event that's happening will have absolutely no effect on gas fees. That's worth reiterating. So this event that happens May, June or July, when it happens, the amount of money, the cost of using Ethereum will not be any different from what it is the day before. The only thing that affects the gas fees are just the amount of activity and people wanting to use Ethereum and demand for transacting on Ethereum. How does this solve, what's going to make the transaction fees lower, assuming there's heaps more people still coming? It's all the layer 2 solutions. So, your Arbitrum, Optimism, and there's about 5 to 10 others. I won't go into it again for the sake of this video, but the more that they get adopted, the less strain and I guess pressure that puts on, this Ethereum blockchain. And that's the result of that will be a cheaper experience for users, sorry. And, the Ethereum Foundation has plans down in the roadmap, later in this year and into 2023 and 24, multiple upgrades and solutions they're working on that will drive down cost, because it will make, or at least the promise is that it will make Ethereum be able to handle a larger amount of transactions. But I did just want to stress that because, I think a lot of people are going to be surprised once this upgrade happens. I think there'll be a lot of people complaining about how Ethereum's still so expensive to use when it was actually never going to change the cost of Ethereum. Speaking of, kind of layer 1 blockchains, Solana last week had some more issues with, I guess, just the uptime and I guess usability of their blockchain. This kind of happened, I think 2 or 3 times last year. It definitely happened once. There was a big, a major one that happened last year where it was more or less unusable for 48, 72 hours. This one, from my understanding, is essentially, I think the developers were very quick to patch something, but, in all that turbulence of the market, right when a lot of users would have had to liquidate and sell some crypto assets that were on Solana, Unfortunately, a lot of them would not have been able to because the Solana blockchain wasn't really operating or functioning like it normally does. The reason for it, I honestly haven't looked into it too much. I've been working on other things, but I did want to point this out because I think it's a reminder that of how experimental blockchain technology still is, and I think people, I guess, are still in this mindset that it's all solved. The reality is all these scalability like solutions and different designs of blockchains remain an ongoing, I guess, research and development effort. So it's always worth noting that when you are using these blockchains or even investing into the underlying tokens. I got the co-founder here, I believe. That was one of the co-founders, but you can read this. There's partial outages, network instability. I believe it just had that there was essentially just a mass like duplication of the transactions, is from what I've read about it. Is there was just like almost, if those of you who would be familiar with like concepts such as like DDoS attacks, like denial of service, it's analogous, I guess, to what I understand is what happened here. There was just a flooding of transactions happening on Solana, and it essentially just overwhelmed it, really, just to dumb it down. It's worth remembering Solana isn't really that old, like maybe 2 years max. Ethereum did really, suffer from similar issues when it had just launched in 2016, 2017. There were a lot of, I guess, situations where there was just a flooding of transactions, and the chain was just like under a ton of pressure, and it was more or less unusable. So it's good to see that Solana have more or less patched this, from what I understand, and they have plans to continue to do more upgrades, I think in the next 4 to 6 weeks, if my understanding is correct. All right, big news here in the NFT space. By far the most significant development last week was Twitter rolling out their NFT profile picture feature. So we've known this has been coming for about a few months now. I think they were soft launching it maybe a couple of weeks ago. I think there was some developers that figured out that it was just about to be deployed. And this rollout started with, I guess, Twitter Blue, which is, I guess, Twitter's premium service. So anyone who subscribed to Twitter Blue, I think it only costs five Australian dollars a month or so, like $3 US a month. Anyone who's on Twitter Blue is able to I guess, make their profile picture an NFT. So it was really, I guess, really cool and exciting to see that go live. And I assume that this is just like Twitter's first kind of step into the NFT space. That's not even their first, to be honest, because last year they actually launched some NFTs. So again, just this is by far like a much bigger splash, because it's actually something that's integrated into their app. And I would continue to see this, be more developed and more integrations into Web3. Even potentially like Ethereum name service or other name services could be integrated into Twitter, where people could, have their ENS name as their username or something, and it can be, cryptographically verified that they are the owner of that, for example. I'm really looking forward to, on a personal, probably more of a geeky level, actually seeing how many people sign up to this from an investor's standpoint, really. Like this quarter, like I'm really keen to see, I guess, Twitter's, earnings in a quarter's time, to see just how much revenue this drove, this announcement, really generated, because I personally brought a Twitter Blue subscription after this, and I reckon there must be hundreds or thousands of NFT enthusiasts and investors who, once this announcement came out, they signed up, and really keen to see just what that impact has on Twitter's revenue. So you can see mine here. I think all of them. They basically got a hexagon if you're an NFT, if your profile picture is an NFT. I chose an art, one of the NFT kind of art pieces I've got. It's called Whack by Camille Chiang. I don't know. I just was scrolling through OpenSea one day, and this was like, I don't know, just one that I really liked. Who knows? I might change it around over time, or might put it back to my Circle NFT, Circle profile picture. But yeah, just really cool to see a traditional tech company doing more with NFTs. And as I've said in previous episodes, Instagram and Facebook, which are both owned by Meta, both of them are adopting NFTs and launching NFT related services or integrations very soon, from what I've read. And just speaking of Twitter's continued integration into NFTs, they also actually purchased and invested in their first ever NFTs. So this really lit a match under the floor prices of whenever they invested in these NFTs. You would see almost people tracking Twitter's wallets and basically seeing what they were investing in. And a minute, 2 minutes later, people would be just buying the floor, or sweeping the floor as a term is, which is basically just buying a lot of the cheapest NFTs in that collection. And yeah, I think they ended up buying, what have we got here? 8, and then they followed up with another 3. So yeah, they brought 11 NFTs from Twitter's official Ethereum wallet. And they did make, temporarily at least, they did make some of them their profile picture. Which was a really, I guess, exciting time for these communities that are in these NFTs, and all the developers of these projects as well. All right, so yeah, getting into this crypto asset, market just tanking over the weekend in particular. As you would have heard me say all throughout last year, I feel like the weekends are the most vulnerable time for actually it works both ways, really. I guess what I'm saying is the volume on the weekends in the crypto space tends to be a lot smaller, because obviously people are away from their desks and out doing non-crypto stuff. But the result of that is you actually see a lot of volatility typically on the weekends. So that can be a huge sell-off, or conversely, it can be a really strong increase in the price of crypto. So drink there. So Bitcoin now is, after that massive crash we saw last week, it's just about halved. I think it did go over 50%, Bitcoin from its all-time high. Like, I think it has rebounded back, but for a while there, it was actually, Bitcoin had fallen more than 50% from its all-time high, which that all-time high was just in October. So yeah, a very small amount of time to see Bitcoin go on such a strong sell-off. But as I've said in previous episodes, for the foreseeable future, Bitcoin is a risk asset. It is what it is. Like, it's very hard to argue that it isn't a risk asset. Like, it's so tightly correlated to tech stocks at the moment, at this point in history, at least. As I've said in the past, Bitcoin has a real, a chameleon type of effect where its use case and what people conceive of Bitcoin really changes throughout the years. At this point in history, I think with the influx of institutional money into Bitcoin and the broader crypto asset space, that that was really welcome, and crypto investors were cheering that on because it was pumping the prices. But I think what you get on the way up, you also get on the way down. So when there is a huge sell-off in tech stocks, these institutional firms and trading desks and whatnot, they're going to treat Bitcoin and crypto as a tech stock, and they're going to make their same investment decisions as what they were doing for tech stocks. So I guess that's a side effect, a negative effect, that what a lot of people don't realize when everyone was cheering on institutional money coming in. But that aside, we did see, Bitcoin and all crypto assets, actually not all of them, I'll get to that soon, just absolutely suffer. And just looking at the weekly chart here, for those of you listening, I'll count out the amount of weekly candles we've had since the all-time high. We've had like 1, 2, 3, 4, 5, 6, 7. We've got 7 red candles for Bitcoin on the weekly time frame, and only 3 of them have been positive. So 7 out of 10, and who knows what's going to happen with this 8, but with this 8th one. But that's just a kind of a sign of the time of where Bitcoin is. I think Checkmate has been pumping out some excellent content for Collective Shift members. Kind of, the real takeaway still is that the old holders of Bitcoin are really not doing anything. Like even throughout the past 4 or 5 months, they've been super, I guess, just inactive really, which is a real vote of confidence for myself as an investor. And it's the lens more to the narrative that Bitcoin is now becoming more tightly correlated with tech stocks, because all the old timers are really not doing anything. So it's like, okay, who is selling? Well, it's probably a lot of the people who have tech stocks as well and are really vulnerable to, I guess, this, like, letting the market dictate their outlook, which is definitely not what I encourage at all. So at least looking at the time frame here on the daily, Bitcoin is still below those 3 really important long-term moving averages. And at the moment, it's a bit below on the RSI. It's still in oversold territory. If you do define oversold being under 30, I know some people do it as under 20, which it technically just hit that on the 22nd of January. And just this morning, actually, we've seen a really strong bounce in the price of Bitcoin. But, it was long overdue, really. It was nothing, I guess, to be too excited about, to be honest, because there was always going to be at least some relief, at least in the very, very short time frames. The big question now is, can Bitcoin hold above 30,000? As an investor, that's all I'm looking for, to be honest. If it loses 30,000, I think there's a general consensus that it could be vulnerable, Bitcoin, to really going into free fall down towards 20,000. That theory or thinking is really off the basis of in between 20 and 30,000, Bitcoin has had very, very little price history. To put that in other words, Bitcoin has very rarely ever been between 20 and 30,000 over the life of its existence, or the whole of its existence. So I'm just personally, if Bitcoin stays above 30,000, I still think it has the ability to, continue higher into the 40,000s. But as I've said previously, I think it's just going to really be dictated by tech stocks, to be honest. Ethereum as well, similarly, just had a really terrible week. Not so terrible for shorters, but terrible for investors, and is down below all 3 of those long-term moving averages. I think at the moment it's about 2,400 on the charts, which is actually the lowest that ETH has been since the middle of July last year, the end of July last year. So just really a really historic week to start, and a really historic month really to start off the year for Bitcoin and ETH and the broader crypto asset market. I did just want to say, as I said earlier, not all crypto assets are selling off. I did just want to highlight NFTs because they've just continued to just hold up incredibly well in this past week or 2. And as I've said even last week, the month to date volume for NFTs is at a record high already, with 5 or 6 days to go. Twitter NFT just got launched. Coinbase has their NFT platform going live soon. And again, as I've said previously, I just think the cultural kind of appeal of NFTs as compared to, just general crypto tokens like DeFi tokens and stuff, I just think it's just such a broader, I guess, total addressable market, to put it in product kind of terms. Just the pool of people who could get involved with NFTs is just so much bigger, and we can see it reflected here. Just Collective Shift tweeted out this morning that it's actually worldwide searches for crypto are now less than NFTs for, the first time in history, really. It's just been phenomenal to see NFTs almost oblivious to the price action in crypto asset markets, and just people just continuing to just pump volumes into NFTs, and invest in them, because there's so much, I guess, still promise in a lot of these NFTs upcoming, and the older ones are still building relationships, building their solutions, getting stronger communities, and really continuing to be, in my opinion, really favorable investments. So, I've continued to be investing in NFTs all these past weeks, including last week, sharing with members what ones I'm investing in. And I expect I will continue to invest in NFTs, this week, next week, and the week after, because it's by far just where all the attention is at the moment. And as I said last week as well, a lot of people, in my opinion, don't appreciate how little and small the NFT market still is. You can go back and watch last week's video where I said that towards the end and showed some charts. So yeah, that's really a focus for me at the moment. And, we're continuing our collective shift to do a lot more NFT investing related content. I think last week was our first ever, workshop and live Q&A where Nathan, a senior research analyst at Collective Shift, and myself, we went into NFT investing, and members were watching on the stream, which was like a really cool, really exciting experience. And we're looking to do, to bring those weekly now, those workshops, where previously, we'd had monthly Q&As, which were monthly, of course. But yeah, really trying to, they won't all be on NFT investing. We'll cycle through different categories of crypto. But I definitely want to start off with NFT investing. It's because, in my opinion, it's still got a long way to run in the short term. I think it's still got a lot of potential to go higher, or at least for the good NFT projects, the floor price of those to really increase significantly. So, that's where I'm spending a lot of my, mental power at the moment. There are still some, crypto assets, small caps that I'm eyeing off to invest in potentially, because of how heavily they've sold off. But that's at least where my head's at for now. Overall, the TLDR, or the lowdown of what's happened over the past week, is that I'm really not disturbed at all. I think the sell-off in the crypto markets was really tightly correlated with tech stocks. I think the innovation, the venture capital coming into crypto, and just the amount of talent is never as strong as what I've ever seen. And for that reason, it's a big reason why I'm still investing so much time and so much of my personal money in the crypto space and the NFT space. Even just yesterday, I saved this because I wanted to show you, the Ethereum hackathon happened last week and broke all previous records. Shout out to Croissant ETH, Twitter user, for really putting this thread together. And yeah, it showcased over 255 projects were built by more than 800 developers in 68 different countries. This is it's just mind-blowing how much innovation is coming in. It's super exciting, and it's a big reason why I think any bear market in crypto, I'm actually kind of looking forward to investing in once we're in a bear market. And I actually don't think a bear market is going to be around for long, just because of those reasons I've outlined in the past 5 minutes or so. So yeah, I will leave it there. I did just want to remind you all, if you aren't Collective Shift members, we have just launched a 14-day free trial. So, if you are Collective Shift members, share them around with some mates or work colleagues or family. If you wanted them to see what our product is all about. Every day we're pumping out, investment related daily posts, putting together different reports on different areas of the crypto ecosystem and NFT space. And then, of course, doing our portfolio updates as well, with the collective shift, actually investing in different crypto assets and sharing what they are with members. So 14-day free trial, we were super pumped to get that, functionally working. And yeah, it's exciting now to see, a wave of people already using the free trial. So, point them to collectiveshift.io, and you will be able to click on become a member, and you'll see the trial there, once you do log in. Once you are actually off the website, and not logged in, which is what I am at the moment. And then also just a subscribe on YouTube would be much appreciated. Comment, I'll get back to you as well on the video below. And if you're listening on the podcast, subscribing to it would be much appreciated, and leaving a review. Really exciting time at the moment, personally, from an investing standpoint in crypto and NFTs. And at least myself personally, I kind of almost prefer when we are in a heavy sell-off, because it does give me more reason to go on a bit of a shopping spree and get those investments under my belt. So we'll leave it there for this week. Thank you for tuning in, and enjoy the rest of your day.